Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for July 14th, 2019, as we are in the middle of the summer doldrums. Yes, we are. But to keep you updated on all new developments that are happening in the currency market, all the great analysis that comes along with the markets moving, try out ForexAnalytix. It's only $1 for 10 days. All you have to do is click right here where it says sign up today, right there. And like I said, it's only $1 for 10 days. Try it out. See if you like it. Once you do that, make sure you download the mobile app. So this way you have all of our analysis, our chat rooms, our alerts right to your mobile device if you're not in front of your in front of your desktop computer. A lot of us, it's in a 24-hour market. We're out and about, and we can't always stay on top of everything, but ForexAnalytix can. So make sure that you download the mobile app when you're trying us out to give it a fair shot. Like I said, $1 for 10 days. Try it out. Okay, so let's talk about this next week, and let me move the data flash here. We don't need that for right now. Let's talk about last week and this week and kind of some of the developments that are happening, as we headed into the end of the week. First of all, there were some pretty, you take the dollar and what the dollar did at the end of the week. The dollar sold off, and if you look at the dollar index, it came right into some resistance earlier in this week. You can see right in, this is the big resistance zone we've been looking at, and we slipped right back to the 200-day moving average at the end of the week. So, we're at a 50% retracement of just the last move higher. And the dollar index, although we completed this double top, you can see we completed that double top here, we are at risk of retesting these trend lows. Now, one of the reasons that I believe the dollar has some further weakness ahead of it is not necessarily because of the dollar per se. It's looking at precious metals like gold. Gold is still setting up to break out. You can see we've had this really big consolidation. This is 6 years of us consolidating in gold. Finally broke out, and now we're consolidating that breakout. This is a pennant. All right, you can see this nice little triangle after a nice strong move higher. Okay, that's just a consolidation waiting for a resumption of uptrend. Now we are in the summer doldrums. There's not a whole lot like on the from economic data that's really going to push us higher. I don't believe, not this week, but we got retail sales on Tuesday. Maybe that is the catalyst. I don't know. But I look at gold, and I know that gold is prepped to break higher. And frankly, if gold breaks this 114, let's just call it 114.30, then the risk of us, trading into new highs beyond 1440, I think is quite high. Now, if that happens, that means that the dollar index is probably going to come back under pressure. So you go, back over to the dollar, and we're sitting on that 200-day moving average. Let's go over to the daily chart. We're sitting at the 200-day moving average. The risk is that we start trading towards trend lows. Now, frankly, if we break below 96, then I think that we could move towards 95. And it's not just, the dollar index. You look at some of these pretty key major currencies, and I think they have room to rally against the dollar. Let's start off with the euro. So when you look at the euro dollar, we're in we had an ascending wedge, or excuse me, descending wedge, right? Descending wedge, bullish breakout. So descending wedges by default are reversal patterns. So we got that reversal out of the wedge, gave us some nice long opportunities. Now we're near channel support. So as long as we stay above 112, I think the risk is to the 200-day moving average, quite possibly to 114.50. I know a lot of you look at the dollar and you're like, you look at the euro and you're like, man, I have a hard time buying the euro. I get it. I'm not a big long euro fan either. I think the euro ultimately is going to go lower. But does that mean that we can't go to 115, 117 before reversing? I think that's quite possible. And especially if you look at, like I said, the rest of the dollar pairs, it may not be necessarily a euro story, it could be a dollar story. Let's take a look at the cable. Now, the cable has been under pressure recently, but what you'll notice about the cable is we had a nice pivot off of this trend line support. This, if you didn't, if you can't tell right now, based on this analysis, because you'd have to go back to last week when we were noting it. This is a 127% extension, and notice how the relative strength is divergent. Okay, so as we're moving lower in price, relative strength has been moving slightly higher, so that's divergent, which means that the cable, quite frankly, I know we're at a 38% retracement, but we could trade right back up to resistance, which is 127.70, 127.80. Big resistance zone up here. All right, big resistance zone. Again, I'm looking at the dollar against all majors, not necessarily just the euro. So you go to the euro and you go, okay, I can see how we could move towards 114, 114.50. I can see how the cable could move towards 127, 127.70. And then you start looking at some of these commodity currencies. Look at the Aussie dollar. All right. Now, here's the Aussie. And if you follow me via Twitter, I've made a little bit of a stink towards the end of the week how the Aussie is approaching this multi-year trend line. This trend line's been in existence since the beginning of 2018. All right, major trend line. We closed at it. The 200-day moving average is at 71 cents. And let's just imagine, maybe there's some sort of positive development out of the China-U.S. trade negotiations, or there's a lot of data coming out of Australia this week. We do have, if you didn't know, we had Australian employment coming out this week. Maybe that is the catalyst that drives the Aussie above this trend line and above the 200-day moving average. It's quite possible. But you'll notice how the relative strength has been divergent as price has been moving lower, right? Price moving lower, relative strength not divergent. It's ripe for a squeeze. I have other things to talk about regarding the Aussie, so don't quite go anywhere just yet. But that's the Aussie. Look at the Kiwi. Kiwi, very similar situation. It's actually held up quite well. We had this broken trend line here. We pivoted off the 50-day moving average and off that broken trend line. We're back up the 200-day moving average. Imagine the squeeze above the 67 and a quarter, 6725, right? We squeezed past that. We could very easily see 68, 69 cents. All right. Again, I'm not looking at just the euro. I'm not just looking at the cable, not just looking at the Aussie. I'm looking at the, Kiwi as well. Now, there are other developments happening, obviously, in the currency market as well. But I want to bring you to a website that I reference every once in a while. This is Adam from Movement Capital. He puts together this free COT data. He takes the commitment of traders data. He makes it in a nice little graphic, and it's posted for free every Friday. It's updated. But I want you to look at. You can see. Let's get rid of the dealers, speculators, Aussie speculators, short, okay, versus the dealers. There's the dealers, slightly long, okay. So spec traders are short, great. Cable. Spec traders are very short. Cable. Cable's ripe for a squeeze. I just showed you 27.70. Yeah, could really happen. Canadian dollar, come back to that. Euro. Kind of flat line. I'm not too excited about the the euro. Look at the yen. Specs are long yen. Well, if you go to the yen, let's go to the dollar yen. The dollar yen, imagine this. You've got traders that are long yen thinking that the dollar yen is going lower. We have this inverted head and shoulder pattern. How about if we stop here, dollar yen goes higher, specs get squeezed a little bit. That's possible. And I'm not really so much worried about like the dollar yen in relation to the rest of the dollar pairs. The dollar yen kind of marches to its own tune. You have to think about these other yen pairs like the Aussie yen, Euro yen, Kiwi yen. they look like they could break higher. I mean, it's quite possible on some of these other yen pairs, which we do cover. I'm just not going to cover them this morning. Just some food for thought as we go through it. So anyway, and here's the last one I want to show you. Look at the Kiwi. All the speculators, retail traders, very bearish to Kiwi. Very bearish to Kiwi. Whoops. Let's go back over here. Very bearish to Kiwi. As a Kiwi looks ripe, like I said, for a squeeze above the 200-day moving average. Imagine if this Kiwi, you know, starts to squeeze towards 69 cents, 70 cents. It's entirely possible. You got a lot of the retail market is short. So why couldn't we really still be in a big longer term range, but squeeze towards the upper end of the range? That's entirely possible. Now, this is more of a positioning issue regarding a lot of these dollar pairs. I don't, like I said, I'm not sitting here looking at the dollar at this moment. Looking at the dollar index, going, okay, well, the dollar index. Let me find it again. Oh, here's the dollar index. I'm not looking at the dollar index, going, okay, well, the dollar looks like we're going back to 90 cents. Not right now, not based on the evidence that I have, but you look at this range and the dollar index, especially in the summer when there's not a whole lot going on and we're range bound, and you got, obviously some people are probably, whoops, let me go back over here. Some people are probably stuck long, the dollar index right now. There's nothing stopping it going back to 95 on the dollar index. Is that a complete meltdown in the dollar? No, absolutely not. But with gold building, the bullish momentum, the natural inverse of gold moving higher is going to be the dollar moving lower. And as long as there's no big major announcement happening at this moment, then the dollar is just more or less in a range. And we could see, like I said, the lower end of this range before the dollar ultimately makes the bigger decision whether it wants to go higher or lower. I think the overall direction of the dollar is probably going to be defined by what happens with trade and what happens with risk appetite and risk aversion. I guess one last chart I should show you before I talk about the events that are coming up this next week. Let's talk a little bit about the S&P. Everybody's really itching to short the S&P, but my question to you is why? The S&P is in breakout territory. Let's go over to the weekly chart. The S&P is in breakout territory. We're at all-time highs. Now, I'm not oblivious to the fact that relative strength is very divergent here. We're not even overbought on like a weekly basis. We are coming up to trendline resistance and 127% extension around the 30-20 level in the S&P. But frankly, the euro still, or the euro, excuse me, the S&P still looks bullish. Now, I might change my tune if we break back below 2960. But I think while we're above 2960, you can see this, this little trend line here. There's no real reason to be bearish. I think some of you might look to cherry pick some good places to be on the short side of the S&P. Like, perhaps you might go, okay, well, I'll play this 1320 level, and I'll try to short it here at the 127% extension and when we're at trendline resistance. But just keep in mind that this is a very bullish chart, and let's go look at the S&P so I can just tell you where the 161% extension is. Making a move up to 3100 in the S&P, it could happen. Again, positive trade news with China and the U.S. as we approach this, election cycle, as Donald Trump really starts to move forward in his bid for for his second term. He's going to want to put together a deal between China and the U.S. and be able to stand on stage and say, look, I did it. I put together this great deal. Whether it's great or not, or how you feel about it doesn't really matter. But he's going to want to put something together to help his case for a second term. And if that is the case, then the risk is the S&P could break higher. So I think if you're out there shorting the S&P or trying to short some risk, you just better keep some stops tight because we could very easily, rally back to, or rally back to, we could rally to 3,100 in the S&P without much of an issue. And again, I was talking about ultimately the dollar index, the direction could be because of risk aversion or risk appetite. Well, if there's positive trade news, if there's positive news and the S&P continues to rally, that in itself could be reason for the dollar to see lower levels. Remember, the dollar tends to underperform when equities are doing better. So you could have, the S&P at 3,100 and the dollar index drop to 94 or 94 or 95 on the index as, investors, turn away from dollars, the safe haven bid, and they put dollars to work in other currencies like like the Aussie, like the Kiwi, like the cable, things like that. So just some food for thought. All right, really quick, let's talk about some things that are happening this next week because that's going to be pretty important. Now, if you use ForexAnalytix, we have a calendar right here where you can see all of this week's events. It's from investing.com. You can skip through and see everything that's coming out. I'll just give you a brief overview. This is Sunday, so tonight there is going to be Chinese GDP, industrial production, fixed asset investment. Expect a little bit weaker, GDP than the previous reading, but in the event that the GDP numbers out of China come in a little stronger, that could obviously help in the risk appetite. And we talked about the Aussie. Maybe that's the catalyst that starts a little bit of a squeeze here in the Aussie above the 70 and 70-50 and back up to the 200-day moving average. That's quite possible. But also out of Australia this week, Monday night or Tuesday morning out of Australia, we do have the monetary policy meeting minutes. Well, that will be Tuesday morning in Australia, but Monday night for those of us that are in North America, and if you're in Europe, you might want to stick around really late at night for that. We also have New Zealand CPI coming out on Monday night or Tuesday morning if you're in New Zealand. Also, that's happening this week out of the UK. We have employment data on Tuesday morning. So if you do have some, if you do have some cable exposure, if you're playing long, the cable, and you're just playing this 125 to 127 and change range, just realize that we do have employment data on Tuesday morning out of the UK. We also have retail sales out of the US. That's going to be the biggest data for the US is going to be on Wednesday when we have that retail sales number. All right, we have German ZEW numbers, business sentiment, which will be Tuesday morning as well. Wednesday, did I just say retail sales is on Wednesday? I meant it was on Tuesday. So in the US, I just want to make sure I said that correctly. Wednesday, we have inflation data out of the UK. We also have inflation data out of Canada. So speaking of the Canadian dollar, let's talk about the Canadian just for a second, and I want to actually show you this chart. So if you look at the dollar Canadian, we are, we closed actually at the weekly lows, and we closed in breakdown territory. A little bit issue that I have with the Canadian dollar, look at the COT report really quick. The market is very, let's get rid of the dealers here. Speculative market's very long the Canadian dollar. All right, so that's a bit of a risk here because that means that the retail market is expecting a breakdown in the dollar Canadian. You look at the Aussie expecting the Aussie dollar to break out, while expecting the Canadian dollar to continue to rally. But we do have inflation data on Wednesday, and if that comes in a little weaker, then you got to be a little careful here with the Canadian. I think you have to be a little careful with the Canadian in general. For those of you that don't know, I'm long some New Zealand Canadian, I'm long some Euro Canadian. That means I'm shorting Canadian dollars and expecting their cross rates to outperform. And me personally, I would benefit on a weaker Canadian read on Wednesday, just FYI. But that's something just to pay attention to. Thursday morning, we have retail sales out of the UK. And then Friday, we have Canadian retail sales data to wrap up the week. We do have University of Michigan consumer sentiment and inflation expectations on Friday, but again, out of the U.S., retail sales on Tuesday is going to be most important. There are a lot of Fed governors speaking, voters and non-voters this week, so that's something that throughout the course of the week I think you'll have to pay attention to. So, guys and gals, remember we are in the summer doldrums. I'm not expecting any big breakouts here as far as, well, I look at the Aussie and I think that the risk is the dollar pulls back a little bit, but I'm not looking for, a complete dollar meltdown. Not at this moment. I just think the dollar has some room to pull back against some of these majors. The Aussie could very easily just, bolt right back above the 200-day moving average. We could see a squeeze in the Aussie or in the Kiwi. The euro, range bound, but looks like we could trade back up to 113.50, 114. And really, if you want to know where my eye is going to be all week, it's really going to be watching gold, because gold's my cue. If gold does that breakout, and by the way, silver, looks like it could outperform gold a little bit here. Look at silver for those of you that haven't seen it. We have a nice bull flag pattern in silver. If silver starts to break out towards $16, gold starts to break higher towards 14.50. That's just my cue that I need to be selling dollars against some of these currencies. So guys and gals, if you found this video entertaining, valuable for your next week, make sure you give us a thumbs up button, or click the thumbs up button on YouTube, and subscribe to our channel, because this way you won't miss any of our interviews that we have throughout the course of the trading week. We do so many great interviews. Dale Pinkert, our hostess with the mostest, gathers some of the coolest and best minds in the markets, and gives you long half an hour, 45-minute interviews with these people, some of them on CNBC. Some of them are just traders like you guys that are making it out there. If you don't want to miss any of those interviews, make sure you subscribe to our channel. So my name is Blake Morrow. I'm with ForexAnalytix. You are listening to the week ahead video. I hope you guys have a great trading week. I'll see you tomorrow morning on the FACE webinar. Talk to you soon. Thank you.